interesting request from somebody recently came in on the inbox. Why do you need to shut down a company and put it into liquidation when it stopped trading years ago and all it's got is a bounce back loan? Why can't we just strike it off? Right, now, here is the answer. And the reason is because there's been an objection to the strike-off procedure being used to effectively close the company down. Very tempting it might be to file a DSO1 form to strike a company off and get rid of it, and wonderful. Except for the fact that that doesn't typically work. As soon as you file a DSO1, the bounce back loan bank will, in many instances, place an objection on the company's house and say, basically, we object to this company being struck off. Now, and the reason is that they do not like, and the government generally doesn't like, because HMRC puts these objections in routinely as well, they do not like companies being struck off. It doesn't matter that the company ceased trading, and it doesn't matter the fact that it ceased trading years ago either. Absolutely, completely and utterly irrelevant in every sense of the word. What matters is people want to see proper procedure. Okay? Now, one of the queries that we were asked is, well, why do I as director have to pay? And the answer is you don't. Okay, but it may very well suit you to do so, because if a company is still on the register and it's rolling on year after year, it's got to file accounts, it's got to file a confirmation statement, it's got to file a corporation tax return. That means potentially you've got to incur accountancy fees, there'll be costs incurred and so on. And if you don't file these documents at companies' house, like confirmation statement, account, criminal offence, potentially be fined, potentially they can prosecute a director in those circumstances. So it is in the director's interest to ensure that they file accounts. The accounts will be relatively simple. They'll be dormant accounts if the company ceased trading years ago. But file those accounts as you must do. And that is the preferred procedure generally in these circumstances is liquidation. As general rule, the banks with the bounce back loans and HMRC will generally want to see the company go into voluntary liquidation, because it means that they, as the creditors, do not have to incur the costs of putting the company into liquidation. Questions, queries, concerns, give us a shout. We know insolvency inside out.